Okay guys, today we're going to be doing a full investment ROI cash flow breakdown of my duplex investment property I just bought. My name is Daniel Kohanowitz, Dan Kohan on YouTube, and I want to just be ultra transparent with you guys. This video might be a little dry. It's going to be just a lot of numbers, but it's 100% fact. All the money and the payments and everything are all totally real. And when I say that, I mean like I've actually collected the money. And it's not just like hypotheticals or anything like that. This is real, cold, hard, money in the bank, facts based on numbers in my area, based on the actual money I've received, based on tax law. And this is the full investment breakdown of the duplex that I bought that you've seen in previous videos. So if you haven't seen those, go check them out somewhere around this video. Click my channel, subscribe, something like that, guys. So I'm gonna go through everything, the cash flow, the costs, the appreciation, the taxes, all that good stuff, guys. So if you're looking to invest in a property, do some cool stuff like I did, like house hack, perhaps do creative financing, like low money down loans or something like that, stay tuned for this video, because if you're looking to get into something like this, perhaps buy your first rental property, buy your first investment property, something like that, or even anything like that, you're gonna want to keep watching this video, because this is really gonna put it into perspective. How much money you can actually make in real life. This is, again, all this data totally factual, totally based on the hard numbers, not some hypothetical projections of what you can make or something like that. This is the real deal. So keep watching here and I will go through and break it down. Now guys, first off, before I break it down here, the reason I wanted to make this video is because I want to share my story with you guys, but most importantly, I want to kind of set your guys' expectations and show you what can actually be done in real life when you're getting into the investment game. Because I know I watched a lot of guys before I got into it, and it was really cool seeing their deal breakdowns. So I could, because you read books and you hear about things and stuff, but not a lot of people really go into the nitty gritty of how a deal actually works and how the numbers actually shake out. A lot of people throw around how much they bought things for, and gross cash flow and stuff like that, and that doesn't really matter. What matters is what you actually can put in your pocket, and we're going to go over that right now. So first things first, let's break down the costs and the cash flow and all the different ways that I make money. So with real estate, there's 4 ways you make money with real estate. There's cash flow, cash on cash return is a common term tossed around. That basically just means the amount of actual cold hard cash that you get based on the amount of cold hard cash you actually invested into the deal. There's also appreciation, which is basically properties values tend to go up in most places just due to demand and more people there's more people coming into the world than they can build homes, and so properties tend to rise in value. Then you also have the principal pay down. If you were to finance a property with a loan, a mortgage, then you would every month you're paying your mortgage, you're actually putting a portion of that back into the equity of the home. So you can't access that money instantly, but you're still adding that to your net worth every month. And you can access that later through the form of like cash out refinances or home equity lines of credit or other financial tools that those means. And the last way you can make money from real estate is through tax savings. You can actually, real estate is probably one of the, if not the most tax benefited classes in the entire tax code. That's why so many rich people are invested in real estate, is to protect their wealth, and because the governments in America and all over the world love people that own real estate. So those are the 4 ways you can make money with real estate, and I'm going to break down those numbers on this property. So let's get into it. So first off, let's go through the cash on cash return. So this property cost me $255,000. That was the purchase price that I agreed on. I chose to get a mortgage, a conventional mortgage, and put down 20% on that loan. And so the other 80% is financed. And so 20% of $255,000 is $51,000. Now, I actually purchased some discount points on my mortgage, and a discount point is simply a fee you pay up front to get a lower interest rate on your loan. And so it costs more money up front, but over the life of the loan, I will actually make more profit. After about 4 or 5 years, I'll break even on that buy down, and the rest of the 26-year period will be pure profit. I got a 30-year fixed rate mortgage. My total out-of-pocket cost for the down payment and the closing costs and the buy down points and everything like that was $60,735. That was the money that came out of my pocket to purchase this investment duplex. So that may seem like a lot to some of you, and it probably is from some folks. You don't actually really need to put near as much down on this property as I did. I chose to put 20% down just because I was going to live in it, and I wanted it to be a really good long-term asset as the cornerstone and the first step of my real estate investing career. On a duplex, you could put down as little as 3.5%. So, on a loan like this, or on a property like this for $255,000, I mean, you're talking about $10,000 down plus closing costs. You could probably be into a property like this for $15,000 out of pocket, which is very cheap. As I go through these numbers, you'll see why. That is a very good deal. So let's get into the actual rent and the cash on cash return. This is a rental property. There are tenants. So what I did with this one is I'm actually house hacking in it. So what that means is I'm living in one of the units and renting out the other unit, and I'm actually renting out rooms in the unit that I'm in. So I am like super mega house hacking. I've technically got 4 doors on this property because I have one single tenant in the other unit, and I've got 3 roommates that pay me rent every month. And the rent numbers I'm going to tell you here are the actual rent numbers. I've collected this much money. I've attracted tenants. These are current as of right now. I am getting in rent $900 from the other side. I'm getting 2 tenants are paying me $550 per month, so that's $1,100. And then another tenant, which happens to be my brother, he's paying me $450 in rent a month. And then there's also the other thing is my portion of the rent, because before I lived in this place, I had to pay rent to another landlord, and so now I get to pay it to myself, and I'm going to factor that in to the cash on cash return, because you might say, well, you're not actually getting that money, so you shouldn't count it. But I would insist that I should count it, because if I didn't have this property, I would have had to pay that $450 to somebody else. So now I have $450 that I'm now saving that I can put towards whatever I want. So it is really a $450 gain. So all that combined together is $2,900 in gross income for the property. And that's including the other side. The $900 side is very low. That's one of the reasons I got a good deal on this property, is because they're locked into an 18-month lease. And so I think a lot of investors were afraid of that. But that should be renting for at least $1,400 right now. But I'm not including that because it's not the real numbers. So $2,900. Now, what is my payment on this property? That's the biggest expense with real estate typically, is your mortgage payment. Now, my mortgage payment is $1,212 per month, and that includes the mortgage, taxes, and insurance. I got a 2.875 interest rate on this property, which is super duper low. I paid about $5,000 in points to get that rate, but it'll definitely be well worth it over the life of the loan. And then again, taxes and insurance. So breaking down that payment, the principal and interest of that payment is about $846 a month, and the taxes and insurance are about $365.63, which equals $1,212.02. So that is the breakdown of the property. My insurance is about $100 a month, and then my taxes are about $265 a month. So that's $1,212. So looking at that, $2,900 minus $1,212 is about $1,687 a month in net income. Now I'll pay for the utilities, all the utilities on my side of the duplex. So that's about $250 included in that. And so my net after all said and done, the mortgage is paid, my utilities are paid, is $1,437.98 per month, which is pretty good. So that's my net income on this property. That doesn't factor in any kind of repairs or anything like that. And I'm not factoring this in for this one. This property that I have is in very good shape. All the utilities and everything are very new. The roof is very new. And so I don't anticipate a lot of big expenses on this property anytime soon. But I am allotting money for repairs, but you don't necessarily have to spend that money until things come up. So I'm netting $1,437.98 per month on this one investment property. So to put that into perspective, I paid about $60,735 for the property, and I am netting $17,255.76 per year just in the cash on cash net return, which gives me a cash on cash return percentage of 28.4% in return. Guys, to put that's crazy, all right? To put that into perspective, if you were to invest your money in the stock market and, in a mutual fund that's basically guaranteed to grow at a certain rate over, a 10-year period, not factoring inflation, you're looking at probably like 8 to 10% return on your money. This is 28.4%, 3 times as much in the first year, just on the cash return alone. That's money that's in your pocket. You don't even have to, like, if you were to invest in the stock market, you'd have to sell those stocks to actually get that return. But this, you can just go right ahead and reinvest in other stuff. It gets even better. For equity for the first year, so a portion of that mortgage payment, like I said, is gonna be going towards your principal, which is basically the balance of your loan that you actually get to keep. And so I would get an additional $3,922 in principal pay down over the first year. And that will vary year to year based on the amortization schedule, but that's just the first years. It will actually get better over time. That's the principal pay down is one part of the way you make money with real estate. So the third part is the appreciation. So I contacted one of my real estate friends, he's a realtor, and he actually pulled some numbers for me. And properties in the town that I'm in, multifamilies, are appreciating historically over the last 5 years, which is a good sample size, at 9% appreciation per year. So I factored my appreciation based on my purchase price. I know for a fact that once the rents are raised like they are now, this property will easily be worth about $320,000, which is about $65,000 more than I paid for it. And I know that for a fact because I watch the market like a hawk. And as soon as one of these duplexes of a very similar comes on the market, it's just gone like that. And they're selling for $320,000 all day long. So I've factored my appreciation based on the purchase price that I paid, but it will definitely be more. So that's an additional $22,950 in the first year with appreciation. So the way that you access the appreciation money is later on. What I can do is, you can't actually get that in your bank, but what you can do later is, like say 6, 12, 18 months down the road, I can have the property reappraised, and the appraiser will say, yes, your property is worth this much. And then I can go to the bank and I can say, hey, I've got this much equity in my property. I want to take out like a home equity refinance or a home equity line of credit. And I can pull that money out and then reinvest it into other stuff. So, but that is adding to my net worth every year, the value. So the other thing, which is the other part of the equity, is the equity that I bought when I got a good deal on the property. If you read any books like the Ultimate Guide to Rental Property Investing by like Brandon Turner or something like that, he tells you want to get every property at least 20% off. And that's pretty hard right now, but I managed to do it with this one. And with the current market prices that are pretty much guaranteed to go up, I bought in about $65,000 in equity based on the purchase price savings of this property. You're gonna have to take my word for it. You can look up the comps in my town and around my area in Kansas City, but I bought in about $65,000 in equity once the property reappraises at the fair market value. And how I got such a good deal on this is, like I said, the tenant on the other end had a very long lease. Most people are probably afraid of that. They're like, another deal will come on the market another day I can get. And the owner was really not interested in, he bought it like 20 years ago, and he just wanted to, get it off of his hands. He wasn't really looking to make a big profit off the thing. He did because he bought it a long time ago, but he was looking more to get out than make a lot of money. So that's why I got it for such a good deal. Okay guys, and the final way that I'm gonna make money in the first year from this is the tax savings. So all of that money, the cash on cash and everything, you would have to pay taxes on that normally, but due to the tax savings, all that money will be virtually tax-free due to the depreciation and the write-offs that I can do on that property, and I'll go through those right now. So from the depreciation, you can depreciate properties over a 27.5-year period. And there's some debate about how you measure that, but I've measured it based on the purchase price, and I think it'll go up in value. So we just did 27.5 divided by the purchase price. That equals $9,272. We can write off the interest paid on the loan, which is $5,662.30. And writing off all the closing cost points and interest fees that I paid while closing is another $13,522. And then other costs like appraisal, inspection was $1,765. So all that added up equals $30,221.53 in write-offs. So after all the cash is paid off for the duplex from the rental income, that gives me another $12,965.77 to write off against my other income from my job. You can write off up to $25,000 in your rental income against your regular income. And so basically my effective tax rate is about 30%. So, for every dollar I make, the government takes about 30 cents. So that number times 0.3 is another $3,889.73 back in my pocket that I don't have to pay the government, which is fantastic. So guys, those are all the numbers. We're gonna go to the total first year return on investment. So this is a good way to analyze a deal. It's based on your first year return. And if going longevity, it's gonna be a little bit different from years to come, but it'll probably get better in the cash on cash. Won't be able to write off as much. But this is a good indicator of, if you should do a deal or not. So first year return, including the tax savings, would be $48,017, which is a 79% return on my initial investment. Let's sink in for a second, guys. 79% return on my money. Where else can you go and get that kind of return? All it takes is a little bit of creativity and just using the systems already in place in the world. You can get a 79% return for very little effort. That's crazy. And if you put a lot less money down, you could get an astronomically higher return. So that's absolutely nuts. Again, to put it in perspective, if you were to invest that money in the stock market, you would probably get like an 8 to 10% return on a basically guaranteed mutual fund over a 10-year period. Guys, this is guaranteed money in the first year, guys, with essentially no risk. Property's insured, tenants are everywhere. There's there's lots of equity in the property. I'm not going to default because the tenants are paying the mortgage for me. There's no way this can really go wrong. And you might be saying, oh, but this is a lot of effort. It's really not, guys. Running this rental property is really not a big deal. You can find people to do pretty much every job for you. For me, it's even easier because I'm actually living in the property itself, so I can manage it right there. Don't have to pay a management company. It's super duper easy. It takes almost none of my time to manage the property. All the leases are automated, the rent's automated, everything's automated, guys. That's the 79% return. Guys, it gets even better. That's not even including the bought-in appreciation that I got when I bought the property at a discount. So with that factored in, that is a first year in 1 year return of $113,000.17. 6 figures return in the first year. That's insane. That is 186% return on my money in the first year. So that's nuts. That is absolutely ludicrous. I mean, that's why my whole investment strategy is just buy more rental properties. It just makes so much sense financially, guys. So this is the real numbers based on the actual statistics, the tax code, the actual cash I'm receiving from my tenants, the money I'm paying. Totally factual, real data. I hope that inspired you guys. Basically earn 6 figures in a year with just this one purchase. So that is pretty nuts. And I can get all that money out in probably a year or two and then put it towards another property. My plan is to continue buying rental properties every 6 months or sooner and just building out a portfolio of them, refinancing the commercial loans and just building the empire out, and so you can eventually retire on your money. So guys, if that helped you, please go ahead and hit that subscribe button down below if you want to continue my journey and see the value here. Please like this video if you found value or it inspired you, because it definitely was inspiring for me to do it. Comment below if you want to know anything else about this deal, any questions about investing, anything like that, guys. I'd be happy to answer them. Without that, thank you guys for watching, and I'll see you in the next chapter.